Bismillah ar-Rahman ar-Rahim. Today, inshallah, we have an important lecture. This is for what? This is for, remember, when you have the initial investment in the previous lectures, when I gave it to you, and it was 170, and the cash flow also, it was given 10, 25, 25, 380. Also, the work, it was also given 15%. Today, inshallah, we will know how can we calculate each item of those, which is very important for you to prepare a feasibility study for any company. Okay, let's start with an intensive example. This is the example. If we understand, we will be ready for any feasibility study. According to this example, we have an old machine and we have a new two machine, and we need to get one of those two new machine to replace the old machine. This is all. So the first machine or the first project, it has a purchasing cost equal 300, shipping and construction cost 70, and this machine, it needs a special networking capital for this machine only, and this will cost us 30, and this machine will be sold at the end of the life as a salvage, khorda, with an amount equal 70 after the 3 years. In case we accept this one, the sales will be this value and the cost of sales will be this value. Remember, this is not a cash flow. We have to deal with the cash flow. This is sales, cost of sales. This is not cash flow. Okay. What is the cash flow? As you may know, the cash flow, the single meal equal net income plus depreciation. This is the meaning of the cash flow. So we have to transfer this amount to be cash flow. This is what we are going to learn today, inshallah. And this is the information for the second machine. And if we accept first or second, from where we have to finance, he gave me this information and he said, whatever the initial investment you are going to accept, you have to finance this initial investment by 30% from common stocks, 20% from preferred stocks, 50% from bond. So, I highly recommend first to start with calculating the work. How can calculate the work? Sorry. Remember, calculating the work, it's what? It's the weighted average cost of capital. Weighted average cost of capital. So this is the item. This is the weight for each one. It was given. How we calculate the cost for each item? I wish to remember. How can we calculate the cost of common stocks? Common stocks, the return of equity equal. We have two approaches. Remember? We have the cap-in approach and we have dividends approach. And because he said, or he gave us information about the beta and the market return and RF, so it means he needs to calculate the cost of equity using the cap-in. According to the cap-in, return on equity or cost of equity equal RF plus beta multiply RM minus RF, which equal 6% plus 1.5 multiply Rm, he said 14% minus 6%. You have to calculate this first. This is 8%. Multiply 1.5, which equal 12%, plus 6%, which equal 18%. So this is why we have here that the cost of equity equal 18%. Calculating the cost of preferred, from where get this value? He said that the preferred stocks, as you may remember, the return of the preferred stocks equal D divided by P naught. He said that the dividends for preferred stocks equal 5 and the stock price equal 40, so the cost equal 12.5. 12.5. So I have to go to the table and put here 12.5. How we calculate the cost of bond? The cost of bond, we said before that the cost of bond, it is the yield to maturity. But because the yield to maturity need a lot of calculations, so we give you the cost of bond or yield to maturity before tax. All what you have to do, just multiply the cost of bond before tax, multiply 1 minus tax rate. This is the cost of bond after tax. Cost of bond after tax equal 12%, multiply 1 minus the tax rate, which equal 9.6%. So this is to get the work, you have to multiply the weight, multiply the cost, and get the sum. So this is the cost of capital, or this is the work, or this is the discount rate. Okay, so this is the first step. Second step, you have to calculate the initial investment for each project. We have two projects. We have two projects, and this is the initial investment for project 1. The component for any initial investment, you have to search for what? You have to search for purchasing cost and shipping and construction and net working capital. So the initial investment for the first one, this is the purchasing, as mentioned there. This is the purchasing price. It was 300. Next, shipping and construction. It was 70. Net working capital 30. Is that all? No. Why no? Because this machine, when we buy it, it will be replaced the old machine we have. So we have to deduct the proceeds from selling the old machine. Okay, how can we calculate this proceeds from the old machine? Okay, I will calculate it here. The proceeds. You have to see by how much you are going to sell the old machine. He said that the selling price for the old machine, it was 90. And also he said that the book value, machine دي قيمتها في الدفاتر عندنا, it was 60. So this is the capital gain. Capital gain. It was 30. Because I have a capital gain, I have to pay tax. 20%. So, I have to pay tax equal 6. Please don't continue. I'm asking for how much the proceeds. In this case, the proceeds, just to imagine what happened, I sold the old machine for 90. When I received the 90, the tax, they stopped me, it's okay. What do you need? He asked me, this 90 contains how many profit? I told him it contains 30 profit. So he said, I have to take from the profit 20%, which equals $6. So in this case, when I received the 90, I have to pay 6 as a tax. So the remainder is what? 84. So this is the proceeds. So the proceeds, if we have a profit, equal what? Equal the selling price minus tax. It will be 90 minus 6 equal what? Equal 84. So when I calculate the initial, I have to deduct from here what? 84. So in this case, the initial investment is 360. I highly recommend, after calculating the initial, you have to calculate the depreciation for the new machine. The depreciation for the new machine, depreciation equal capital cost minus salvage divided by number of years, which equal what? Where is the capital cost? This is the only capital cost, which is purchasing price, shipping and construction. This one and this one will not be included when I calculate the depreciation. So this is equal 370 minus how much is the salvage? It was 70. The salvage for the new machine divided by 3 years, which equal $100 Egyptian, whatever. Okay? So this is what? The depreciation. I will do the same exactly for the second machine. So second machine, for the second machine, he said that the purchase price equals 305, shipping and construction cost 30. This machine, no need new networking capital, and please don't forget I have to deduct the proceeds from selling the old machine. So this is the initial investment. Please don't forget, when you calculate the initial investment for the second one, don't forget that you have to do what? You have to calculate the depreciation. What is the depreciation? This value, 305 plus 30 minus the salvage, 305 plus 30 minus salvage, which equal 50, divided by 3. So this is the depreciation for what? For the second machine. Now, before I calculate the cash flow, I would just explain a little thing. You have to know what? In my example, this proceeds, this is, when I calculate this proceeds, it was selling price minus tax, because I have a profit. But this is out of our example. Assume in the example that the selling price, it was 50, and the book value, it was 60. In this case, I have loss. I have not capital gain, I have what? Capital loss. So if I have loss, how can I calculate the proceeds? When we have a profit, the tax, they take a tax from us. But when I have a loss, they give me money. They don't take money, they give me money. Did they do? Yes. By transfer this loss to another unit, it has a profit. So in this case, the tax you are going to pay next year or for another activity, it will be deducted by what? By this one. So in this case, we don't have tax, we have what? We have tax shield. Tax shield means وفر ضريبي. Equal how much? 20% multiply this value, it has how much it has to. So in this case, the proceeds, it will be 50 plus the tax shield. Again, the proceeds in case of profit equal selling price minus the tax. Proceeds when I have loss equal selling price plus the tax shield. Certain cases, if you sell your machine with the same price as the book value, which means there is no loss, there is no gain, so in this case there is no tax, so the proceeds equal what? Equal the selling price. Okay? So if I have this case, I have to deduct here 52. If I have this case, I have to deduct from here 60. Now we finish everything related to calculating the initial investment. Now how can we calculate the cash flow? The cash flow in this example, he said that the sales equals this value. Don't forget, cash flow equal what? Net income plus depreciation. So this is the sales. I deduct the cost of sales. The remainder, we call it gross profit. So this is the gross profit. I will deduct the depreciation, 100, we calculate the depreciation before, 100, 100, 100. The remaining equal EBIT. This is the value of EBIT. Taking the tax, so 20% from this value, this is the tax, 21. Tax. Earning before tax minus tax, it gives us what? Net income. So this is the net income. But I need cash flow, not income. So I have to add the depreciation again. Depreciation, so you can say why we deduct the depreciation and add it again. Yes, it's a good question. We have to deduct the depreciation because if I didn't do that, in this case the earning before tax would be how much? Would be 205. 205 minus 0, 205. So in this case I will pay tax 20% from 205. It will be how much? It will be 41. And this is not right. So this is why I have to deduct depreciation first, and after calculating the tax, I have to add again the depreciation. So deduct the depreciation and add the depreciation. This is because the tax purpose. Okay, so this is the cash flow. Net income plus depreciation. But the net working capital, I will receive the amount I pay for net working capital by the end of the life. So net working capital has two treatments. Number one, you have to add it to the initial. Number two, you have to add the same value to the cash flow at the end of the year, last year. Also, if this machine has a salvage, you have to add it to the last year also. So, not each year, only last year. So the cash flow equal what? Net income plus depreciation, and at the end I have to add the net working capital and salvage. So this is the cash flow after tax. This is the value we need. We don't need anything from those. Same I will do for the second machine. This is the second machine. Sales, cost, gross profit, minus depreciation, earning before tax, minus tax. This is the net income. Again, add depreciation, add net working capital, which was 0, add salvage, which is this value. So this is what? So this is the cash flow at the end. Now we are ready to choose which project we have to deal with. What happened exactly? This is the 2 project. This is project 1, has an initial 316. Project 2 has an initial 251. Project 1 has a cash flow as follows: 184, 224, and 200. Project 2 has a cash flow equal 203, 223, 277, and we calculate the WACC 12.7%. Now, which one we have to accept? We have to apply whatever he asked you. We can apply net present value, profitability index, internal rate of return, payback, adjusted payback. So, this is what we did. This is the project 1. This is the present value of the cash flow, 184 divided by 1 plus R power 1, 1 plus R power 2, 1 plus R power 3. So this is the present value. Net present value, it is equal this value minus the initial, so it comes how much? Positive 167. So NPV for this one equal positive 163. How much the NPV for the second one? We'll do the same. This is the same exactly. 203, 223, 277 divided by 1 plus R power 1 power 2 power 3. So this is the present value. Take the present value minus the initial, which we calculated before. So it is 298. So according to the NPV, we have to choose this one, which means we have to replace the old machine by the machine number 2. Assume for yourself, assume the NPV it was negative for the first one and second one. Should we accept any new one? No. Why I have to accept a project with negative present value? In this case, we will reject the 2 projects and continue working with the old machine. Hope that you understand everything and have a nice night. Goodbye.